Hello, Chart Watchers, and welcome to this Thursday, July 25th, 2019 Market Watchers live show with your host, Tom Bowley and Erin Swinland. For those of you joining us for the first time today, welcome to the show, and for our regulars, welcome back. Let's take a look at the market action. We've got the Dow Jones Industrial Average currently down 127 points, the S&P 500 down 14, the NASDAQ down 58, and the Russell 2000 down 10. So across the board selling today, a little profit taking. 10-year Treasury yield gapped down earlier today. We were down about the 202 level. We have rallied, though. We're now up 3 basis points to 2.08%. I'll be watching that 215 to 217 area. We'll talk about that in just a minute. Volatility index, even though it is up today, remains in this steady downtrend that began back at the beginning of June. A move back and close below 12 would be very bullish for equities. Consumer staples, one of the leaders today. Even though it is flat, it is leading on a relative basis, trying to hang in above its 20-day moving average. Industrials trying to make a major breakout. We saw that yesterday. We continue to trade just beneath that breakout level around 79, 79.5. Close above that would be bullish for industrials. Energy having a rough day today. We did gap higher at the open, but you can see we've got a bearish engulfing candle currently in play. We'll see whether or not that holds into the close. Materials down a little bit today. We are off the earlier lows, but the dollar's been rebounding, not helping the materials group. Internet stocks taking a big hit. As you can see over here, Facebook gapped up after its earnings, but has pulled back. I actually like Facebook there at the 20-day moving average, but that pullback since the open is hurting the internet group. Autos really struggling today. Ford, Tesla, both out with disappointing results. And then finally, medical supplies. You can see a big gap down there, trading near a 2-month low. Align Technology having a very, very rough day after a poor outlook going forward. We'll talk about that one in a bit as well. All right, Erin, another big day here on Market Watchers Live, day 4 of relative strength. And we got a couple of our good friends and fellow senior technical analysts, Julius Kempenaer and Arthur Hill, with us. But Erin, how are you doing today?
I am doing great. Trying to keep cool here in the desert of Southern California. Hundreds and hundreds, but I hear that somebody out there is ready to compete with me on miserable weather. So, but I'll let him talk about that.
Yeah, Art, it's a little warm out there here in Belgium.
It is quite warm. Julius and I have got about 100 degrees today, and we're setting all-time records for our respective countries. So we're in Bermuda shorts and T-shirts doing this show.
Well, I think you'll both be really hot today with relative strength as well. So maybe there's a little coincidence there happening.
We're going to show you some hot stocks.
Yes, on both an absolute and relative basis, I'm sure.
Yes.
Well, hang in there because we do have this will be a fun discussion today. Erin is going to moderate, and I will join Julius and Arthur, and we're going to talk a little bit about relative strength and how we use it, how we got introduced to it. A lot of good stuff. So, guys, hang in there. We're going to start that in about 15 minutes or so.
All right. Our upcoming schedule, we do have one more day of Relative Strength Week, and that will be with David Keller tomorrow. Tom will be doing August seasonality on Monday. Mary Ellen McConigal and Dave Nuttig will be in for ETF Corner on Tuesday of next week. Jake Bernstein will be here Wednesday, and Roman Bogomazov will be with us on August 1st. So great week ahead. As far as tomorrow, also a great day. We will be doing first that many faces of relative strength, and you'll get to see our beautiful faces. 10 and 10, our first symbol is going to be Johnson Controls, JCI. We do have a special talking technically today on relative strength, and then we will finish off the program with some chart breakouts. All right, Tom, let's get it started. Technical news and headlines.
Yeah, we had a bunch of economic and earnings reports overnight and this morning. We'll start with this morning's economic reports. June durable goods, you can see, rose much more than expected. When you strip out the transport, still a very, very strong month for durable goods. This is a somewhat volatile economic report. So looking at 1 month report, probably not a good idea. You really want to take a look at this over a few months. Initial jobless claims also out this morning. Of course, it's Thursday. We always get that Thursday morning. Came in much better than expected, 206,000 versus 219. And then finally, June wholesale inventories came in just slightly below expectations, rising 0.2% versus the 0.3% that was expected. We look at the reaction in the bond market, and I put this on a line chart. Of course, line chart just connects closes, so we eliminate a lot of the intraday action. You can see today we are moving up about 3.5 basis points, and the last two reaction highs we've seen have been at about 212, 213, and then over here just below 215. Notice the 50-day moving average currently at 213, and when we look all the way back, we haven't been above the 50-day moving average definitively since back at the end of February, early March. So this would be a big move if we could get up through these recent reaction highs. And of course, when the yield's moving up, that means money is rotating away from treasuries. And historically, when the 10-year treasury yield is on the rise and money is coming out of treasuries, that tends to coincide with a very strong move higher in the S&P 500. So I think there are several reasons why we want to keep an eye on that, and this is one of them. So if we get that breakout above 215, I think that would be at least a short-term bullish development for equities. All right, earnings reports. We could have listed about 150, 200 on here today, but I thought we'd just limit it to some of the key reports. You can see all of them listed here except for Tesla beat earnings expectations, but the reactions to a lot of these reports were not that great. I saw last night in after hours many stocks getting hit hard to the downside. Not surprised that the market's a little weak today. We've had a big run up. I think we're seeing some profit taking, but overall the bottom lines were pretty good on most of these reports. First up, looking at the charts, let's look at Facebook. Facebook did gap higher, so we were up at almost 207 on the open. We've pulled back. I want to see how we finish. Obviously, if we go back down and close below about 197, I think short term that probably wouldn't be a very good look on the chart. But the thing I do like about Facebook is that it is leading the internet space here, has been for the last 4.5 months. And off of the June low, you can see internet has started to pick back up again on a relative basis, although it is down today with the Facebook weakness. But overall, this is an area over the past 2 months that has been strengthening. I think it's an area to keep an eye on. Facebook, if it holds that 20-day moving average and can come back up, close at or near that high later today or even tomorrow into next week, I think that would be very bullish. So I'm liking what I'm seeing so far on Facebook. Next up, how about PayPal? PayPal, I've been a big fan of PayPal, but I'm a little nervous about it going forward. I actually think I'd switch over to Square at this point. PayPal did miss on its revenues, came up just a little bit short. They beat on the bottom line easily, 86 cents versus 75. And based on the way the stock has been trading up until maybe a month ago, I would have expected a pretty good report here. This has been a leader in its space, but it did guide quarter 3 and fiscal year 19 revenues lower. Quarter 3 and fiscal year 19 earnings per share higher. So a little bit of mixed guidance as we go forward. Stock you can see getting hit. I would just simply say this. Maybe what you do is you watch today's low. And if that were to fail on a relative basis or on an absolute basis, I think I'd be a little concerned. And where I was coming up with Square, if we look at this on a relative basis, Square versus PayPal, you can see that we got this bottom back in June when the market started reversing. PayPal's actually been performing better than, Square's been performing better than PayPal. So if PayPal loses the support that it established earlier today, there wouldn't be any question in my mind. I think Square is something I would be looking at. Next up, ServiceNow, another leader in the market and in that software space. You can see the stock has been on fire in 2019. It has been one of the leaders in software. I still like the stock. They did come out. They beat on the top line. They beat on the bottom line. They guided fiscal year 19 revenues higher. I think all of that is good. I think this 50-day moving average test today was an opportunity. Stock was getting hit pretty hard. It's well off those lows now. Solid volume. I expect in time we'll probably see another breakout here on ServiceNow. Wasn't all rosy though. Tesla. And if you look at relative strength, shouldn't be a surprise. Autos overall had shown a little bit of strength off that June high, but I still look at this as a lot of relative weakness. This group peaked versus the S&P 500 back in January. Look at Tesla and what it's been doing relative to the S&P and relative to autos. So not only are autos going down, but Tesla's been one of the worst performers. So you shouldn't really be shocked when they report revenues that were well below expectations, earnings that were twice, or the loss was twice what was expected. Market was expecting 54-cent loss. It was $1.12. Stock getting hammered today. Nothing really looking good here on this chart at this point. 3M, company that I was a little concerned coming out with this report. And you can see the relative strength here versus its peers and versus the S&P, not good. Its peers relative to the S&P moving lower. We got a nice response at the open. They beat on the top line, beat on the bottom line. They guided in line, but this is one reason why I don't trust these companies when they're in these downtrends on a relative basis. Stock gapped up and has really been selling since the open. I think 3M's got a lot of work to do here still on the chart. One that was very strong today, and this is an improving group for sure, Raytheon, the defense, aerospace area has been strong. Raytheon trying to make this breakout above a multi-month high on an absolute basis. Look at the defense group continuing to power to new highs. This week, we've broken to highs not seen since more than a year ago. The October highs that we saw, October of 2018, have been cleared. Look at the volume coming into Raytheon. And this has been one of the weakest performers. They beat on the top line, beat on the bottom line, and they guided higher for fiscal year 19 in terms of earnings. So a lot of good news coming out of this group. And I'll tell you, one stock that I've talked about on here, I own, has continued to perform well. KTOS, Kratos Defense, another breakout today. Volume pretty good for early in the day. Just wanted to mention this one in that space. And there are plenty of others. Lockheed Martin looks really good. And so let's keep going here. Waste Management. Waste Management, look at the strength in this stock. The disposal services group really has been strong, not only on an absolute basis, but also on a relative basis, showing a little relative profit taking. But that was after a huge move into the end of May, early June. So I'm going to give them a little bit of leeway here. But Waste Management's been a great company within this space. They did beat on top line and bottom line, which is what I would have expected. I think we're just consolidating. Maybe we'll see a 50-day test, but I think Waste Management continues to look very strong. Now, here are some others that reported that were not showing on your screen earlier. Netgear. Now, this is in the telecommunications space. I was not expecting much out of Netgear today. They surprised. They actually came through, beat on the top line, beat on the bottom line, and you can see that reaction. Got a little bit of overhead gap resistance that we have to deal with here. But overall, this is an improving chart. Love this sudden gap or move higher in relative strength. And this has not been a bad area, telecommunications equipment. So I think that Netgear is a stock certainly to keep an eye on. I mentioned Align Technologies earlier. They had an awful report. They, well, actually, I shouldn't say that. They beat top and bottom line, but their guidance, Q3 revenues and earnings per share lower. Look at the relative strength here versus the medical supplies group. It wasn't far from a 52-week low before the report came out, and now it is at a 52-week low. Check out the volume. We gapped way down, and we're continuing to sell off. Certainly looks like that 180 level that was hit back in January is coming into play here. A line down $74 or 27%. Really big move there. Xilinx, remember yesterday talking about this one? I said I didn't trust it with the earnings report coming out. It did gap down about $7 or $8 today, trying to rally back. I'm just a little concerned that after the move down on heavy volume back in April, it hasn't really reclaimed its relative strength versus the semiconductors. It's not horrible. I just think there are others a lot better than this one out there. And then the last one I have, Meritage Homes in the home building group. Huge report here. Great report. One of the best I've seen. Just blew away the revenue estimates by almost 10%, 865 million versus 808 million expected. Bottom line, $1.31 versus $1.03. They guided fiscal year 19 revenues and earnings per share higher. Check out that volume already. We're not even the halfway point of the day, and it's already had one of its heaviest volume days of the year. And look at the relative strength. It was at a 52-week high before this earnings report came out. A lot of this stuff is telegraphed by Wall Street if you pay attention to relative strength. All right, let's take a look at the dashboard here for 1 second because I wanted to pull up CRI. It is the number 2 ranked scooter mover on the mid caps. And when we pull up the chart, and I'm going to get a quick update here, make sure I'm getting the latest. This is one I think worth watching because this has been a critical area over the last year on multiple occasions, trying to get through 99 and 100. Relative strength has been poor. The group has been poor relative to the S&P 500. I would be careful unless we make the breakout. And if we do make the breakout, I would be keeping a tight stop. So things are improving here with Carter Holdings, but I would say it's not out of the woods. So for that reason, it's my scooter mover of the day.
All right, I have some upgrades and downgrades, and the first one I'm going to do is a little different than the way we normally do it, but Activision and EA were, one was upgraded and the other downgraded. So I'm going to start off, of course, with the upgrade, and Activision Blizzard was moved from a neutral to a buy by B of A Merrill, and their price target has moved from $54, which of course is right about here, and it has moved to $56. So not a big difference here. Let's bring that down just a hair. There we go, a little bit off, but we're close. So anyway, they're looking for a breakout clearly above this area of overhead resistance. And, that would be where you're going to look. Really not the best performer since December lows. And, it still hadn't hit its lows. It actually did that in February and really has been trading mostly sideways. Not a whole lot of interest here. I don't like the look of the OBV kind of declining here, confirming this decline. I just thought it was interesting that they upgraded this one. And then for EA, I'm just going to put it up here next to Activision. And there you can see they're both really traveling in a bit of a trading range. I don't really see why Activision was upgraded by them, and yet we have EA being downgraded to a neutral position. So they went on a buy for Activision and they went on a neutral for Electronic Arts. And again, not the best performer here. I mean, on both of them, even with the upgrade over here. So I wasn't really impressed with those charts, both of them, even though one was upgraded. All right, so we're going to go ahead and I'm going to look at, let's see here, I want to get rid of this guy. There we are. Yes, there we go. We can now see everything. I like the look of the PMO. It's now gotten above the zero line. It is trying to tip over a little, but you've got a decline of more than 4% right now. So not a surprise to see that momentum on the PMO turning down. What I like is seeing that OBV starting to trend up. And, we got a little bit of a breakout here. The problem, of course, is we've pulled back. But as we always say, it's great to look for those breakouts, but then it's especially nice when you end up seeing a pullback on that. And I really like the look of this 20, 50-day EMA positive crossover. And there you go. We've got a nice rising trend. You could probably, top of it would be right about there. And so I think it's looking pretty good. The problem is this 200-day EMA. It got stopped there and it's pulling back. But, credit, we're looking at, RBC Capital moved it from an underperform to a sector perform. So not the punchiest kind of upgrade you would get. Looking at AT&T, that was also upgraded today by Credit Suisse from an underperform to a neutral. Their price target is now 29, which of course is going to bring you down to here, which looks like they're looking at that support level over there. Really nice move we're seeing on AT&T. So they're looking for a continuation. I think it's interesting that I don't know why the target is way down here, but that's what it said. Downgrades, Caterpillar, not a surprise after yesterday, bringing down the Dow along with Boeing. PMO sell signal here. We've got OBV volume. You could already see there was a problem as the tops were moving down, but we were seeing the tops here on price moving up even in this right there. So not a good sign. And then finally, I'm going to look at Teradyne. It was downgraded today by Stifel, and they moved there from a buy to a hold, and they moved their target to $53. Of course, we're trading above that with this nice breakout. Came out of this ascending triangle. I think that is very positive as well. And that, I will say, is it for the upgrades and downgrades. All right, we will be right back with our relative strength panel after this.
The ChartWatchers newsletter features expert technical commentary about the current market from some of the industry's leading technical analysts. See what's really happening in the markets through their eyes and gain an edge in your own investing. The newsletter is packed full of insightful and educational articles intended to help you become a better investor. Whether you are brand new to charting or a seasoned technical analyst, each edition will provide a wealth of informative content. It's the best way to stay informed on all the latest news, events, updates, and additions here at StockCharts.com. Whether it's a new feature or blog, an upcoming conference, or a special sale, you'll hear it first in the ChartWatchers newsletter.
Right, we are back, and it is time for the many faces of relative strength. And here we are, our faces. So we will be looking at, I have various questions for you about relative strength that I'm very curious to hear. I know that, Tom, you use relative strength a lot. And let's face it, Julius, RRGs are pretty much the picture of relative strength. That's what you're looking at. And Arthur, I know you have quite a few tools that you look at as well. So I'm going to start it off by asking you guys, how were you introduced to relative strength, if you remember? What did you think about it? And really, what tools do you typically use for relative strength? How do you use it in particular? I'm going to start with Julius.
Okay, that question can easily go on for like 30 minutes, maybe an hour, but I'll try to keep it short. My introduction to relative strength is actually, well, looking back in hindsight, it's quite funny. Goes back when I was working as a buy-side analyst at Robeco, which is a big asset management firm in the Netherlands. And obviously, because you're a buy-side analyst, you don't have a P&L to show. So the management had figured out that all the analysts had a number of stocks that they were following, and you were tracked on your recommendations of those stocks. And then at the end of the year, they would look at what your results were, and that's where your pay for performance, they called it at the time, right now we'll call it a bonus, would be depending on. So it was in the early 90s. So, stocks were going up all over the place. And like good technical analysts, we were just putting buy signals on all the stocks because they were breaking out to the upside. Come the end of the year, and we had pretty much had a performance which was the index because we bought every stock on the screen. And that was when we thought, maybe we need to do something differently. And that's when we started to use relative strength to pick out the best of the best, as we called them at the time. And that's how I got introduced to relative strength. And then many years fast forward, at that time I had switched to the sell side in the institutional world, and I needed to present my relative strength ideas because all the PMs that I was talking to were only interested in relative strength in a very condensed and grabbable version. And that's how RRG came to life in short, because RRG enables me to show all the movements in the universe of a portfolio manager in one picture and explain to him and tell him and point out, this is where you should pay attention and this is where you should be careful. So that's how I got introduced. That's how I used it. It started out in individual stocks, moved on to sectors, and basically right now I'm using it for everything that I do, starting at asset allocation level, going down to stocks, individual sectors, individual stocks in a sector, et cetera, et cetera, et cetera. Don't know how much more time I have, but I could ramble on for a little bit more about this.
Right. Well, of course, like I said, you're Mr. RRG, and relative rotation graphs, of course, relative in the name right there. So I know you're going to be talking a little bit more about your RRG graphs, but let's go ahead and Tom, What do you remember when you were introduced to relative strength, and what did you think of it? And what tools do you typically use? Oh, we can't hear you.
Is that better?
That works.
Thank you. I've been mostly self-taught, but I did read John Murphy's book on intermarket relationships, and that probably was where I got my first start. I mean, he really recommended using relative ratios, and so I started using them to help me analyze the overall market, the strength of the market. So I remember the first time I developed the XLY versus the XLP on a price relative chart. And I started noticing that, we would have big movements in the market to the upside when the relative strength of consumer discretionary stocks were outperforming the consumer staples. And so that was kind of the start where maybe a light went on for me that it's really important to see not only what your stock or your ETF or the overall market is doing, but really to begin looking at the relationships between different stocks, stocks within an industry group versus a sector, sectors versus the overall market, and just kept zeroing in to try to find the best of the best. So that's really how it started for me. And the way I start my day a lot of the times is on my dashboard here. If you click over on the right side, this little gear shift, you can make sure that you have all these different panels set up. But I have these chart list panels checked. And what that does for me is I can look down and quickly visualize the relative strength of the sectors and the relative strength of the industry groups. And if one is moving, I have a general idea of how they're all performing. But if I see one in particular that I know I've been watching closely, and for instance, I'll give you the home construction group. Home construction I talked about yesterday was kind of teetering near its 20-week moving average. And I'll go ahead and add that down here so that you can see what I'm talking about. But today's strength is helping this group hold on to a very key level. So you're looking at it moving down here, but remember, this is a weekly number here. Today, it's actually higher. Yesterday, if we had looked at this, we would have seen a potential breakdown below the 20-week moving average. But today, we're back up above it because we're seeing that relative strength today. So for me, it's just a really quick way to get a sense of what's moving in the market. I tend to focus much more shorter term than a lot of the folks here at StockCharts and maybe many of our listeners and viewers. But I like to keep my finger right on the pulse of what's going on, and that's the way it helps me.
All right, excellent. And I do need to give credit where credit is due. I mean, I studied for my CMTs, I learned about relative strength. But honestly, Tom, being on this show with you for over 2 years, I've learned a lot more about how I can use it and really make it work for me. So I'm going to give you some credit there as to really opening my eyes, I guess, to relative strength.
Okay.
And those price relative charts you do are really great. So I don't usually compliment you to this degree. So I know you're getting ready to fall out of your chair.
I'm soaking it in right now.
Exactly. All right, Arthur, you've been nice and patiently waiting. When did you learn about it, and what tools do you typically like to use?
Well, like most of us, or a lot of us, I cut my teeth on technical analysis of the financial markets from John Murphy. And I use ratio charts a lot in the beginning. And what I found out was I was scrolling through a lot of charts. I like to look at candle glance charts in particular to see how the highs and lows are setting up. And what I found was I need to know, I always know where the S&P 500 is. So here on this chart, we've got the S&P 500, and I see, that there's a lower low there in June. June 3rd was a lower low. It moved sharply lower. So if I'm looking through any of my charts, be it an ETF or a stock, if it's making, say, a higher low, I know it's holding up a lot better than the market at that time. And then the S&P gets a new high there on June 21st. And anything that made a new high, say, before the S&P 500 is holding up or outperforming because it was able to make a new high. So it's what I call relative chart strength. And just to give you an example here, we've got the FinTech ETF, FINX, and it's been definitely one of the leaders. But if you look here, there's the lower low in the S&P 500. And I didn't even need the S&P 500 on this chart because I know that it made a lower low from May to June. And so when you look at your chart for the FinTech, you're like, well, wow, look at that, the May low. And it held that May low. It didn't have a lower low. So it held up a lot better during that market correction. And then you had a new high there in early June. So it was leading by hitting that new high earlier. So I always keep in mind what are the recent peaks and troughs in the S&P 500 and try to apply them to a certain chart I'm looking at. I don't even need to really see the S&P 500 because I think I look at it like 100 times a day. So I pretty much know what it's going to do. But here's iPay, the mobile payments ETF. It had a higher low from May to June, and it broke out well before the S&P 500 did, a week or two. So that's how I've learned to or come to use relative strength as far as relative chart strength is concerned and the price action on the chart.
All right, excellent. I really appreciate that answer from everybody. Okay, so relatively speaking, technology and, especially the semiconductors and software, I mean, we've seen them just clearly outperforming right now. Are there any sectors or industries that you guys are watching or where you're seeing some renewed relative strength that you can tell me about? And I'm going to start with Tom this time.
All right. Well, there's a couple of areas that I've talked about here on MarketWatchers Live, and a couple of areas that I'm investing my own money. So, yeah, let me go ahead and show you what couple areas I think that look pretty good to me. I'm going to start again looking at the relative strength of the industry groups. I can tell you that, for instance, defense stocks had been underperforming from April. This is a relative chart of the defense versus the S&P 500. And you can see the huge relative decline that we had back in late 2018. And then we tested it in April of 2019, put in that nice relative double bottom. And when you come back up and you clear above this middle reaction relative high here, that kind of confirms that bottom is in. And when we move back up through the 50-day moving average, you can see later the 50-week moving average. You can see the 20-week moving average also coming up and closing above that 50 and supporting relative price action as it pulls back. When you look at the PPO, and keep in mind, this is a relative PPO. It's not how the strong momentum is on the defense group. It's really about the relative strength of defense versus the S&P 500. And you can see with the strength this week, we're actually turning back up, and we are now hitting a new, fresh relative PPO high, one that we haven't seen in over a year, probably about 14 months or so. So I think defense stocks, and we've seen a ton of these companies coming out with strong earnings this quarter, here in the last couple of days, but for the most recent quarter end. And so I think defense stocks certainly are one of the areas that I would have a lot of focus on. When we go down and we look at the absolute chart, you can see that not only have we seen a move off of that December low to the upside, but we've also seen the breakout above the late September, early October high. We paused there at the beginning of July. I was waiting to see what would happen. And with the market pulling back today, we've got defense stocks breaking out and showing even further leadership here. And you can see that with this relative number here on the chart, breaking out above the June high. So I think defense is one of the key areas that I'm focusing on right now. As long as this relative strength stays intact, and by staying intact, I mean, it would be best to stay above a rising 20-week moving average. If you look back to 2016 through 2017 and into 2018, that's for the most part what defense did. And if we stretch this chart out, I'll go back several years, I think what you're going to find is that defense stocks tend to be very strong performers. And so what we went through in this relative weakness period was a little bit unusual. And now we're starting to strengthen again. So one way to take advantage of that is simply go back in to the scooters, and I went through this a little bit yesterday for those that watched the show, but if you go into the scooter reports, large cap stocks, type in defense, it'll quickly zero in on the best scooter movers. Northrop Grumman, which just reported great results. Lockheed Martin reported great results, gapped up, then traded lower and has come roaring back. If we could go to some of the mid cap and small cap, not so much the mid cap because they don't get traded very often. But here on the small cap, there's that Kratos defense I mentioned earlier, 96 scooter rating, stock breaking out to a new high today. That's how I use relative strength. That's a group that I really favor right now. And those were a couple names that I like.
Excellent. It's kind of funny because when I was doing my scan for our chart breakouts, Kratos was one that came up on my scan. So interesting to see it show up as one of the highest scooters in that particular industry. All right, Julius, how about you? Now I know we're going to likely look at a relative rotation graph. So what is interesting to you on those graphs?
Of course, you will look at a relative rotation graph. I don't know anything else. Well, we were discussing before the show to show how I would pick some maybe early movers and early stage stocks or sectors that could be of interest in the next move higher. If it's going to happen. So the starting point here is a relative rotation graph of US sectors, and this is a weekly RRG. That's where I mostly start. And technology rotating back up. I wrote my Don't Ignore This Chart blog today on XLK and rotating back up. That's super bullish. So if you want to read about that, go to the DITC blog. But for the more gutsy, ballsy moves, then there is something else that I'm looking at. And on this weekly chart, I'm looking at industrials inside the lagging quadrant, which have just started to turn up, and materials inside the improving quadrant, because they're at a very nice RRG heading and they're very close to breaking into the leading quadrant. So the next step that I would do, by the way, discretionary here is making a nice turn as well. To make it a little bit more granular, if I move to a daily version of that RRG and then see where my materials and my industrials are, you will find that materials is also in the improving quadrant on the daily, and industrials is inside improving and rapidly closing in on moving into the leading quadrant. So these two sectors I'm going to be keeping a very good eye on in coming days and coming weeks. Now, to find interesting stocks inside those two sectors, all our subscribers will have access to these predefined groups. And the members of the XLB, of the materials sector, are predefined. If you load up the RRG, you will get the weekly, easily switch that to daily, and you'll be able to find or browse through all the individual stocks that make up the materials sector. Now, what I often do is break my screen in two, and every time I am on MarketWatchers Live, I get the question, how do you do that? How do you break your screen in two like this? So you have your RRG on one side and your chart on the other side. And the way you do it, it's actually a Windows feature. So you do, or probably the Mac also has it. It's the Windows key and then the left arrow or the right arrow, and it jumps your browser window to the left or to the right, and it gives you a perfectly located two screens that you can work on side by side. Now, what I do is another trick here is I select a line, and then again with the control key and the arrow up and down, I can browse through a number of these stocks. And then what I do is I'm going to look at them. This Dow is too far ahead. I don't like that. This one too. This one I like because it rotates from weakening into leading. So what I then do is I bring that stock to my regular sharp chart, type in EMN, and I can analyze that stock. And I have this RRG shows you the relative versus the materials sector. this chart shows you the relative versus SPY. So they could be a little bit different, but I like to have the other perspective as well. And if I look at this chart, I just love it. It broke out to new highs. It's now testing that former resistance level as support. That's all good. Relative strength is breaking above its previous high, and we have the RS ratio line just shaving off that 100 level on SPY, and it's doing even better versus the materials index. So EMN, Eastman Chemical, is one of the stocks that I would keep my eye on as a future leader when materials starts to really pick up. And we can just carry on this exercise. Look at CF Industries, looks good as well. So you go there, and then you have, what I like is have the big picture here on my left where I see everything zooming in on CF. And here I have the price chart with, in my case, it's the ratio line and my RRG lines. But I can imagine that any one of you have their own sort of workflow, preferred workflow, what you do, what you like. Maybe you work with an RSI or scooters or PMO, PPO, whatever there is. It doesn't matter. You can still have your RRG on one side and the chart setup that you like on the right-hand side, and make the comparison between the two. Again, here, CF breaking to new highs. Our RS line needs to break higher against SPY, but it's very close. And the RRG lines looks like discounting that break, that it's going to happen there. Go further and maybe find something a little bit more esoteric, like here, this one, MOS. So go to MOS, look at that one. And then you have a stock that is not as strong as the ones that we've seen. That's very easy because it was in lagging and it's now picking up. So this is a little bit more gutsy. The relative strength seems to be improving, but we need price to actually take out this resistance here at 25 roughly. But this is the way that I use RRG in combination with a chart setup. This is my chart setup. You can use anything you like to keep an eye on the big picture, pick out the icings on the cake, the good stuff inside the sectors, and then bring it to my final decision on the price chart, because that's always where I make my final decision.
Oh, absolutely. I have to agree with you on that. Yeah, the relative rotation graphs, it's just great because it's just so visual, and it just, I don't know, for me, it really brings it all home as far as, how well these sectors are doing, and the fact that we have it in such a way that you can, change your benchmark and find the sectors and go from there as well. So, all right, Arthur, you've been kind of quiet because I haven't called on you in a while. Repeating the question, are there any areas, industries that are interesting to you right now, maybe seeing some improvement?
Yes, I'm going to highlight three, and one of them is in Tom's area. It's defense, but I'm going to start with ITB. And I mentioned in the beginning that I like to compare the peaks and the troughs. Well, that often works, say, when the S&P 500 has moved down and you see that your stock or ETF has held up relatively well. But with the S&P 500 at a new high, we need to probably use some other techniques to find some potential relative strength movers. And I'm going to show these charts with the price relative and then also with the RRG indicator, which is based on the price relative. And if anybody doesn't know RRG, it's by, just kidding. Julius just talked about it. So what we have here is ITB. And so I'm going to combine it with the price. And first on the price chart, it's doing just fine. It's in an uptrend overall. And it looks like we have an ascending triangle brewing. So that's a bullish continuation pattern. You have a higher low here. With the bounce, we have another higher low. So that means the lows are getting higher and buying pressure is coming in. And then you have the supply line or resistance there. And if you break out there, that signals a continuation higher. And if you look at the indicator window, you can see the price relative turned up over the last 2 days. And home builders, they were leading in April and May and into June, but took a hit in June and a little bit in July. And I'm watching for a breakout on the price relative. Now, the indicator window there shows the RRG indicators, and the green one is momentum. And as you know, with basic technical analysis, momentum often leads price. So you get an upturn in momentum before you get an actual upturn in price. And so the momentum indicator for RRG is positive, or it's above 100. And so that means it's turned up. And you can see the relative line, the RS ratio line, is still below 100. It needs to get above 100 to actually show relative strength again. And if we get a breakout here, I think that'll happen.
All
Now,
right.
the other one we have here is General Dynamics, and it comes from the defense group that Tom was looking at. And if you look at the price relative, we'll put a line on this, but there's a breakout. All right, that's a multi-month high in the price relative. So that tells you we're outperforming. And then if you look at the RRG indicators, the RS ratio indicator has been above 100 since June. So that shows relative strength. That reflects this upturn and breakout in the price relative. And the momentum indicator is kind of going below 100, above, below, but it's back above 100. So that's positive. So this looks like a relative breakout. And then you have to combine it back with the price chart and see, well, what am I looking for on this price chart as far as something that's actionable? And we can see here that we have a resistance turn support zone. I'm going to go ahead and take a little liberty and just ignore this big spike up here. But I think there's kind of a resistance zone here that's turning into support. And maybe if we get a little pullback here to that 180 area, it might be an opportunity to partake in something that is showing new relative strength and could be a leader in the coming months. And then the other one is Goldman Sachs. And John Murphy has highlighted Goldman Sachs in his commentaries of late. And we've got some similar things happening here. There you can see the RS ratio is positive. And you can see the RS momentum indicator is positive. So that means the RRG is in the leading quadrant here. And you can see that the ratio chart, we've had a breakout above that prior high. See those highs from the spring? So we're getting a relative breakout. And then if you look at the price chart here, again, just like General Dynamics, you can see we have kind of a resistance zone that turns into support. And maybe this gap too, but if you get a pullback, say, to this 205 area, that might be the opportunity to get on the bandwagon here for Goldman Sachs. But part of this exercise is to put things on your watch list and then watch them and be patient and let them come to you with the setup that you like.
Absolutely. Okay, we're running a little low on time here, but
Are we yakking away?
yeah, we really should go ahead and get to this last question, because I know our viewers and readers, they're always interested in learning how to scan for relative strength. I know for me, I have so many scans, as most of you know. And the way I really use the relative strength in a scan is the scooter, the StockCharts technical rank. And I think for me, it just gives me that instant information. I use it on every chart. And I think it really does help you pick out some very interesting possibilities for trades. So
and it's right there on all of your scam results. Immediately. It's quite easy.
It's lovely. I just I love the scanning. The scan engine is just one of my favorite tools here at StockCharts. All right. So are there any scans that you use to define relative strength? I mean, just real quick, is there just your favorite? Let's do that.
Okay, I've got the screen, so I'll just continue on.
Sure.
I was just setting up RSI here. I do use the RSI as a screen, and I've got the S&P 500 value here at 56.61, and it's a 65-day RSI, which is basically 3 months. And so I've got a little scan code, and I'm going to have to change that number. So if I want stocks that are outperforming based on that indicator, you could use rate of change as well. You could use the PPO, you could use the PMO. You set the value for the S&P 500, and then in your scan, you make sure that the indicator is above that value. So I want RSI to be above 56.61, want the close to be above the 200-day because I want an uptrend, and then just check your syntax, of course, to make sure it is correct. And so I've got my baseline in there, and all my results will have an indicator value of RSI that is greater than that of the S&P 500. And you can do another sort if you want by clicking that scooter column. So I can get the strongest scooters at the top. And I would usually put these in a chart list. So I would just replace an existing chart list. And we'll do this scan dump 3. And I'll click OK. And then I can look at these individual charts to see if I want to go further with any of them.
That's excellent. And yes, you'd bring up a good point. While when you're looking at one chart, you know, the RSI gives you a lot of information about that particular stock or index, but you can compare those values because they are, you know, range bound. And so
Indeed.
unlike the MACD. So, okay, I'm going to go ahead and Julius, why don't you, do you have any scans you like to use for relative strength?
Yes, I do. Let me share that with you. By the way, Art, I love that setting the RSI value for the S&P as your base. That's a very nice workaround of the fact that we cannot scan for relative strength as of yet on StockCharts.com. I know the developers team is working hard on that, and it's probably high on the list. For me personally, the most asked question is from users is how they can scan for RRG values. I'm sure it will be there at some stage. But for now, me personally, I have flipped the process around, and I just looked up this article. It's about a little bit more than a year ago since I wrote about how to combine relative rotation graphs and the turtle soup setup. Well, I'm not going to explain that whole setup. You can look at the article and find it. The scan is even in there. But what I do is I run that scan, and it's here in my most popular scans, and then I get my list. And that list I will then throw at an RRG. So if I run that scan, here you go, there it is. I say replace that list, and I replace the turtle soup by the way, it's looking at the S&P 500 stocks, and then it's got these stocks in there, and I can view that list as an RRG. And there you go, you got the picture. And these stocks fulfill the criteria of a turtle soup setup, which is basically a trend reversal signal. And I can now put these stocks that are putting in a trend reversal signal on the low side on an RRG. And immediately, like Amgen and Duke Energy stand out as being very positive, together maybe with Caterpillar. The scan is on a daily basis, so it makes sense to look at the RRG on a daily basis. You look at that. A little bit of a different story here, but now I can see that still Amgen is pretty good, Duke is not that good, and Caterpillar looks very good. Why are they that? Because they're pointing in the right direction, and especially Cat is over there. And then I'm going to do my same trick as I did earlier on. I have that RRG, and I'm going to inspect the chart of Amgen again on a daily basis, and you see that turtle soup is testing for these lows. So this is resting at its previous support at a support level. Relative strength is testing support, and you see that the RS momentum line has slowly started to crawl up, while RS ratio is leveling off. So it's finding the they say the nicest flowers are on the edge. So you're on the edge. If this breaks, it's not good. But if it holds, you're very early in the game. Mm-hmm. Caterpillar probably a little bit different because it looks to be a little bit more ahead of the game, but we can check that. So here you got Caterpillar. It looked as if it was breaking lower yesterday, but it reverted back to that. So that's a positive thing. And that positive is carrying on today. And you see that RS ratio level is leveling off. Momentum is picking up. It seems to be, holding above this support level. Again, a little bit gutsy, picking up at low prices. But, if you want to be a profitable trader, that's where you probably put in your buys and not like chasing things higher. So this is how I combine scanning with my relative take using RRG.
Excellent. And Tom, I'm going to finish with you. How do you use scans for relative strength?
All right, well, first I've pulled up a chart here. I mentioned the XLI was on the verge of possibly breaking out. You can see this is a 2-year daily chart. So you've got the industrials trying to make a breakout to catch up with technology and consumer discretionary, which have already broken out. And so if I just focused on this group and I go back to, to highlight some areas here in the industries within the XLI, we talked about defense, so I won't talk about that one again. But I think it was in, let me see if I can quickly find it here on my list. It's the building materials group. When you pull this up on a relative basis, you can see that it had been downtrending for a couple of years. Now it's uptrending, just bounced off that rising 20-day moving average. So if industrials break out, this is a group that's been leading this area. So what I would do in a technical scan is simply go in. I changed, this was a default scan which showed volume 40,000 shares. I increased that to 200,000. I want stocks that trade at least 200,000 shares a day. The group is building materials and fixtures, and you can get that down here under the sectors and industry groups. So I simply go down to the industrials, and I could put whatever industry group in here that I wanted, but I know building materials has been strong of late, so that's where I added it. I just simply clicked on that, added it here, and then it pops up. Then the last thing I did was I added the scooter, because that is a relative strength tool, and you can find the scooters. Where did I just? Oh,
Yeah,
it wasn't
there,
right there. So you've got the scooter here. You click on that, you add that, and that's where this comes up. I think that comes up with a default of 90. I changed it to 80, and then I hit my run scan button, and my scan results come up, and there are 15 stocks that meet that criteria. Now, some of these are not going to may not be enough volume. You can see some of them have traded less than 100,000, even though they met that criteria of 200,000 average. So that might be one way to sort them, make sure you're getting a liquid stock. The other thing, though, is to simply use the scooter and start right at the very top and go down these charts to find a stock that meets your criteria. Because if industrials break out and the building material stocks continue to lead, I want to have leaders in this space. So this is a way you can zero in using the scanning engine to find relative strength within a group.
That is excellent. You guys, this has been absolutely wonderful for our relative strength week. I think that having this panel, giving you the many faces of technical analysis or relative strength. So I really appreciate, especially Julius, Arthur, thank you so much for participating in this from all the way across
Nice shirt,
the world.
Julius and Tom. Very nice shirt.
Yeah,
I know somebody did mention in the chat room how you all are color coordinated. I don't have the blue polo shirt in my closet, so
we got to get you one.
Play along, but being the moderator, I think I had to be a little different anyway, besides being female.
We're Blues Brothers.
Yes.
That's right.
All right, excellent. Well, we'll say a goodbye, and Tom, it's time to start annotating some charts for the 10 and 10. So let's go ahead and we'll get started with the first one, which was JCI.
All right, let's go in and jump in, take a look at JCI. Okay, so JCI, I was looking at the chart earlier. I think it's got really nice relative strength. And surprisingly, it is in that building materials group that we just talked about. So this is a group that has been showing some nice relative strength since the end of October. You can see the group trending higher versus the S&P 500. So if we get that breakout on industrials, I think this is a stock that has actually been a pretty good leader. Volume came in on this last breakout. I think this is definitely a stock to consider. What I would look for in terms of annotations here is simply looking at the recent lows and then maybe the breakout level, which was right here where we saw that volume come in. I would say 40 to 40.75 offers up really nice support on any pullback.
All right, excellent. Our next one is going to be CW.
All right, CW was one that also I think is in that defense group, if I'm not mistaken. It is. The volume is so-so. It's okay. It trades mostly over 200,000 shares, so I'd be okay with that. Notice the trend here in the last couple months has been very strong. It's part of a great group. Is it the best stock in the group? No. which is why I would rule it out. I think that there are others that are just absolutely flying, including that KTOS. I think Northrop Grumman's starting to look a lot better. Lockheed Martin looks great. So I think there are others that look better, but this does not look bad, partly because it's just simply in a group that has been so strong. We broke out yesterday above the prior high. I think we might see a little support around 128. Probably keep an eye on that recent low down here in the second week of July, which is closer to 123. I think if we broke below that level and I was in it, I'd probably switch it out for a different defense stock.
All right, excellent. Okay, the next one up is going to be PI.
All right.
And I'm not Impinge, I think, guess.
I thought it might be private investigator. Okay.
Where's
PI.
Magnum?
There you go. You can see that there's not a whole lot of the relative stuff. Let me switch over to the other chart so we can just focus on price action and maybe look at that PPO. Yeah, we're breaking out here. PPO is a little weak. Volume, I would just be careful if we fail to hold this breakout level because of that negative divergence in the near term. I mean, the chart's been going higher. That's always a good thing. But here, if we broke back down much below 35, and especially below this 20-day moving average, because then we would be losing this price support, I think at that point I'd grow a little bit more concerned. But right now I'm okay with it.
Okay, let's see. The next one I have for you is HXL, and that's Hexcel Corp.
Yeah, I think I talked about this one in the aerospace group. Really, really strong looking chart. Let's go back to that relative chart. Love this breakout with volume to a new high. Here's the aerospace group, unable to make a breakout on an absolute basis above the March high. Look at what Hexcel's doing relative. Last 3 months, it's going straight up. Look at the volume coming in. I think that's further confirmation that we're seeing some accumulation. So, and that's with a group overall down here, as you can see, that has not been performing well. So I like the stock a lot. I would just say because the group has been so weak that if we did go down and maybe fail to hold gap support in the 20-day moving average, I'd probably reevaluate. But otherwise, this is one of the leaders, so I like it.
All right, and the next one I'm going to give you is PEP, of course, for Pepsi.
All right, Pepsi, it's starting to show not so good of signs, and Coke has been performing better. We talked about this one earlier this week, just on a relative basis, how Coke has been doing a much better job. I really wanted to see Pepsi hold 130, and we broke down yesterday. Volume was not light, and it continues to move lower. I think until this stock begins to right itself, get above the moving averages, I think I'd probably go with Coke instead. So I'm going to pass on Pepsi for now.
All right, let's do Codo, C-O-D-O. And that is, let's see, where is that?
Right, Codo.
Yeah, that's not coming through right.
Yeah,
I think somebody must have typed it in. Let's go ahead and we'll do ATRO.
ATRO.
Mm-hmm.
All right, ATRO, well, it's holding on to this recent support level. I think you've got two support levels, and I'm guessing that it holds on here. Let's look at the relative chart too while we're at it. But I really like this breakout over here with the volume coming in. Look at the relative strength pick up. I think the relative strength has been struggling a little bit, but we haven't lost any major support level. So I would watch, and it is in that aerospace group. So part of the problem could just be because the group has been so weak. This isn't the best stock in the group. I think certainly Hexcel would maybe be one to be looking at there. But there are really three levels here on the downtrend, on the downside, that I like. I think 35 to 37.5 is actually a pretty good area to accumulate if you like the stock. I think if aerospace begins to outperform, this is one that I would think is going to start to pick up again. So I think ATRO looks pretty good.
All right. I looked at two internet stocks in the upgrades, downgrades. This is different. Take-Two Interactive, TTWO.
Yeah, this has been
it's way better.
Yeah, it's definitely looking better than some of the others, and I think you can see that here in the relative strength. The overall group has been declining, but Take-Two versus the internet space has actually been on the improve. The 20-day moving average has been holding. I wouldn't say that this is my favorite stock in the market, so I'd probably keep a fairly tight stop. We've seen multiple tests of that 20-day moving average. I mean, I could draw lots of arrows here, but I think you get the picture. Every time we go down and hit that 20-day moving average, we bounce. So I think I'd keep a tight stop there, close below it, and I'd look for something else.
All righty. How about ConAgra Brands, CAG?
All right, CAG. ConAgra, look at the food products group breaking out to a new 52-week high here. We're on a relative basis, the group is not that great, and the stock on a relative basis has been downtrending since topping back at the end of April. So I think there are a lot of other trades that look better than this one to me. There are a couple areas to watch, maybe to the upside. If we could break above this level, that's where we were at, and we gapped down on this heavy volume. So we've come up and we filled this gap. But I think that, along with this trend line resistance, is really going to make it a little tough here for the stock. So I think 29 and a quarter is really just a wall for traders. Until we can get above it, I'd look elsewhere.
All right. Next one up will be Workday from the software industry, WDay.
Yeah, this has been a leader in software for quite a while. It's been consolidating. I would not give up on it. The volume is not really heavy on the selling. So I think it's just consolidating before perhaps another explosive move to the upside. It's in a great area of the market. It hasn't broken down on a relative basis. What I might consider doing is watching software made a breakout here. So maybe watch 2,700 there. And maybe watch this relative strength. If you move below this line here, you're talking about the stock moving to about an 8-month relative low. That would begin to make me nervous, especially if you see the volume pick up on the selling. But otherwise, I think we go higher.
All right, excellent. And our last one, this Bud's for you, Anheuser-Busch.
Yeah, Budweiser reported, and nice gap up. It was a big scooter mover, I think, earlier. It's in an uptrend. The overall group has been going down, the Brewers. So you've got a leader. You've got a leader in a not so great area. So I think I would watch a couple of key support levels, because again, if the group doesn't attract more money and continues to move lower on a relative basis, then I think I would watch gap support, which is right here at about 95. The prior high was at about 93 3/4 or so. I'd watch that to the downside. I think this is a nice looking chart. I just don't trust it because of its overall group's relative weakness.
All right, and that does complete the 10 in 10. Here are your symbols coming up, and I will get those into our MarketWatchers live chart list at the end of the show. Just go to the articles tab, click on the MarketWatchers live blog, and the link to that live chart list is right there at the top. All right, we will be right back with the final market update and a special Talking Technically.
StockCharts is unique because we combine the commentary, the education, as well as the tools in which you need in order to analyze the markets.
The human component around it with all the commentators that we have. I mean, look at the lineup with Murphy and Pring and Morris. These are household names in the industry. They're all tied to StockCharts.
People are always surprised with how many tools are on there that they didn't know about. 5 or 6 different methods for finding relative strength, as an example.
Not only do we have these really great chart tools, but we have this amazing chart school, and you have these shows, and you have all these ways that you can learn.
Our final market update. Not a good look for the Dow right now. Let me make sure this is correct here. I believe it is. Yes, not a good look for the Dow right now. At this point, I would be watching to see what we get there. It is down 0.61%. NASDAQ is really suffering right now too. It is down over 77 points. We can see that we have, let's get this out of the way. We can see that the New York Stock Exchange in general is also down a little over 0.5%. Mid caps and small caps, they were doing better yesterday, but now they are back to suffering, with the Russell 2000 down almost geez, a whole full percent here. TNX Treasury yields are higher right now, reading 2.081%. The VIX is starting to rise. We are seeing a reading at 13.27. The dollar is also on the move to the upside, up almost 0.25%. And consequently, we are seeing gold suffering right now, but it is down 0.84%, which signals to me that there are more sellers. It's not just due to the dollar's rise. USO is finally making a move to the upside. It is up 7 cents. And finally, TLT is on its way down. Looks like it's going to test its 50-day moving average soon, down over 0.5%.
All right, I wanted to just take a quick look at the consumer staples, which are leading. And I can see that on a relative basis, we are moving higher here. If I pull this chart up, what it does tell me is that we normally see relative strength in consumer staples when the market is weak. We saw that in the fourth quarter. We saw it again April into May. And of course, today, now we're down this week, but that's because the market's been up. Today, consumer staples is up because the market is down. So it's not unusual to see defensive groups move to the top of the leaderboard. I still like what's going on in the market. Consumer staples, along with just about every area, is moving up on an absolute basis. And as long as we're not breaking out with leadership in the defensive areas, I'm okay with what's going on in the market. So just to kind of stick with the theme this week, I wanted to show you the consumer staples here on this relative chart. Coming up next is David Keller with Talking Technically. Ironically, this week's topic is relative strength. Listen in.
Hi there. Today we're going to talk about relative strength, which is the idea of looking at a ratio of one stock or security relative to something else, a benchmark or another stock, a sector, something like that. This is different from the relative strength index, RSI, and that's an important relationship. And RSI is a measure of a specific price momentum, right? A specific stock or an asset, how it normally trades, and then how what the momentum is relative to that normal trading range. Relative strength, true relative strength, is different. It's a comparative relative strength. So you're looking at usually a price of a stock, for example, Apple or something, relative to the S&P 500 or some other benchmark. How is this security doing relative to all the other securities I could be buying or selling at a certain point? Looking at the chart here, we're looking at a chart of Alphabet, looking at the last 1 year on a daily basis. And at the bottom, you can see we have a ratio of Alphabet versus the S&P 500. Now, the way that we do that is actually in the bottom when you add price performance as one of your indicators. You just simply add the ticker, colon, and then the benchmark, or whatever you want to do the relative measurement to. So in this case, normally I would do it relative to the S&P 500 index or the spiders, just some broad equity benchmark. Now, looking back at the chart, we can now get an understanding of what the price is doing of Alphabet, but also how that stock is performing relative to all the other stocks we could be looking at in our universe. So in this case, from August to the low in December 24th of last year, you can see lower lows and lower highs in the price of the stock. In the bottom, we can see this ratio going lower, showing you that Alphabet has been underperforming the S&P 500 during that period. In a period of transition or stabilization, the ratio will go sideways, telling you that it's moving in line with the market. It's a market performer. But as Alphabet started to improve, and really it started to outperform actually in November and December, you see lower lows in the price, but the relative strength is actually starting to improve. So even though Alphabet is going lower, the relative performance is increasing, which means other stocks are actually going lower much further than Alphabet is. So by looking at the price and also looking at the relative strength, you can make an assessment of whether or not the price is in an attractive technical configuration, but also whether that stock is looking good or bad or attractive or unattractive relative to other stocks that you could be buying or selling. This is actually a great example of where you might want to use the two of them together. So if we look coming out of the December lows, if you look in January, you can see that Alphabet has increased, right? Higher highs, higher lows, and a good uptrend. But look at how the relative strength is actually sloping downwards. This is because a number of stocks actually were accelerating out of those December lows, really improved in January into February, while Alphabet was improving but not quite as much. So you might have the right call on the chart, but if you don't have the relative strength on there, a lot of times it can be unclear as to whether or not you're really looking at the right chart in the first place. One final comment on relative strength is remember that you can always look at an asset relative to anything. So you could look at Alphabet relative to the XLK, look at it relative to technology stocks, to a specific group like biotechs. You could look at two stocks relative to one another. The most common thing is to look at it relative to the benchmark that's going to be most applicable to you and your investment process.
Hey, welcome back, everybody. And we are going to go into chart breakouts. And Erin, I know you've been looking, and there are a lot of chart breakouts. So what do you got today?
All right, well, I decided to go ahead and run the chart breakout scan. I've started putting together scans for some of our different segments that we have here. And I wanted to, of course, highlight the chart breakout scan since that's what we're going to be doing today. So really, it's a very simple scan. It is relative strength week, but this particular scan doesn't actually use it. But it really gives you that sense of where you're getting those breakouts. You start off with looking for a stock that's popping with its volume. You then go over and look for a PMO that hasn't quite crossed its signal line. So I'm looking for something new that might be interesting that's coming into a bottom. And then the PMO line, it needs to be greater than yesterday. So I need it to at least be rising. So crossover, no crossover, and PMO rising. And I ran the scan today, and I had a really interesting group of stocks to look at. There are 29, which is a nice amount of results. I'm going to go ahead and I'll replace my existing chart list to my scan dump. All right, and once it's in there, now I have an opportunity to manipulate it. I can organize by scooter, which is that relative strength ranking. I can go by industry or sector, but what I like to do is to go into my candle glance. And for those of you, I know a lot of times we are asked, how do you set up your own candle glance style like this? It's actually quite simple. When you go into your chart, I'll show you right here. You can see with chart styles down here, there are different names. And if you name your candle glance, the one you want to have, see, this is mine, and then you save it as candle glance, then that's what's going to come up when you do those, when you do your candle glance. All right, so I was very interested in seeing some of these breakouts. I'm not going to pay close attention or look at charts where you have a major move to the upside or a gap up, because as we always talk about, you don't really necessarily want to chase your stocks. So I just kind of peeked through here and looked for the ones that looked interesting to me. So I will go through a couple of them with you and tell you why I thought they looked interesting. But I think there were a lot of nice setups today. So I'm going to start off, and I know one of the ones that I really liked was Alpha Tech. And the reason I did, and I'm going to annotate here so that we get a feel for it. So we have this area of overhead resistance, and it's pretty much a horizontal across. And then I noted, of course, that rising bottoms trend line. And Arthur earlier in the program was talking about the ascending triangle, and that it is a continuation pattern. And the expectation should be a breakout to the upside. That's what will really execute and tell us it is a true pattern. And certainly we're getting that breakout on this 7 3/4% move to the upside. I like it. We might get a pullback to just below it or right around that breakout point, because that is kind of a typical kind of thing you will see with these breakouts. But look at the PMO. It's starting to move to the upside again. Might get that crossover. You've got a pretty decent volume. It hasn't really done great things after that initial push there back at the end of June, but it is holding up. So I thought this one was an interesting breakout, ATEC. And let's go ahead and we'll view these all again in candle glance. The other one, let's see, one of the other ones I was interested in was Cadence. And I know we've been looking at that software space, and it has been on fire. Well, we saw that Cadence was in a declining trend here. It had started rounding off, but we hit that 50-day EMA and boom, we are making that move to the upside, and we are seeing that breakout right now. Go ahead and annotate that for you. All right, so nice breakout there above that short-term overhead resistance. It's trading above it as well, and currently it is above that area of overhead resistance. So I liked that one. And of course, the PMO is turning up. I thought that the OBV looks like it's starting to improve with this breakout. So it'll be interesting to see if that move to the upside on the OBV reaches past those previous tops. All right, next up, let's see, I saw Cadence. Looking right now, this looks kind of interesting right now with CSGS. This is a pretty low volume type of stock though, so you just be aware of that, but really cool breakout here. Let's get auto support resistance. There we go. And you can see that overhead, what was overhead resistance, now support, matched up with that top back in early May. And of course, the tops we see in early July. PMO is turning up. Also, you might note here that the PMO is starting to rise as well. The bottoms are rising with price. Like to see that. And again, we did lose that 20-day EMA, but we managed to close above it, and it touched that 50-day, and it is now popping to the upside. We got the breakout yesterday. It's down 0.45%. This might be the place to get in because we are already getting that pullback, and currently, even with that decline, it's still holding above that support level. All right, next up, let's go ahead and let's see. There's a lot of really interesting ones right now. I'm going to look at Kratos. We were talking about that, Tom. It came up on one of your lists earlier, and I do like this breakout. I think at first blush, as they say, I was a little concerned about the pattern that I'm seeing here. So there's your rising bottoms trend line, but when we connect these tops, it looks a lot like a rising wedge. I think it's close enough that you can say, I think it's a rising trend. So I'm going to show you how you can do that. And I just copy that, and yeah, so you can see it's not quite a rising trend channel. And if you bring that down, it makes it a wedge, and that is a bearish pattern. But you know what? I like the performance right now of Cadence. It's up 4% right now. We had the earlier breakout on it. There we are. Didn't hold, but then we came back, tested that 20-day EMA yet again, and now we're popping up off of that. So I think that Kratos is actually looking kind of interesting, and I know that was one of the areas you were looking at, Tom, in our roundtable. All right, the next one I'm going to give us is Kiwi. I know that was in here. Yeah, there we go. This one caught my eye because of also that breakout, but I'm looking at this as a possible flag that is now executed. And a flag, here's your flagpole, and this was your flag right here, or pennant. And we're getting the breakout from that flag. I'm going to show it to you on a weekly chart so I can show you what the upside potential here would be on this based on that flag pattern. So we'll just move into not monthly, a weekly. Here we go. So the flag is very clear when you look at the weekly chart. And let's go ahead. There's that trend line tool. So there's that flagpole. There is the breakout from that pennant or flag, as you can see right there. The upside potential is, and I'm going to measure it this way in a percent change, but I'm not so much paying attention to the value here. I'm just looking at the length of the pattern of the flagpole. And what you do is the length of that flagpole, you add it to the breakout point. So I'm just going to copy it and just drag it right up here. And we'll look at our auto support resistance and see what that level matches up to. All right, I don't see anything particular. It's very close to that top up there for the execution of that flag. At this point, I would probably be a little bit more conservative, if you want to say, moving from a 21.30 to up to 26, but that looks like a better area to look for that overhead resistance. But I do like the shape of that. Look at the PMO is super strong, hasn't reached that overbought territory yet. So I think that Kiwi looks really interesting right now. And let's see, I had two more, so I'm going to look very quickly at, let's see, TMK is Torchmark, and it's in the life insurance area. There's your nice, really beautiful breakout. And we'll have to see where the overhead resistance lies. I can go to that weekly chart and get a quick peek. And you can see right now we have gotten above the all-time high here at 92.50. We aren't closing above that yet, at least for the week. We'll have to see where it ends up today and if it gets there. And then finally, I think the last one I was going to look at was Tempur-Pedic. This would also come up on that scan. There's the weekly chart. I'll go ahead and annotate this, and we'll go back into a look at the daily chart. But as far as overhead resistance, 82.50 seems to be the level to look for. And, it's been on a tear. We're looking at some great movement here over the past year. Now let's go ahead and look at it on our MarketWatchers. There it is on the daily. So yes, see that really nice breakout. It has been in a rising trend anyway, but what I'm noting is just the fact that we've got, that was the very short-term overhead resistance there. And now we're seeing that pop. Currently, we are trading right around the open. So I guess we could say we might end up with a doji, and those are bullish candlestick patterns. I don't follow those necessarily, but I think that looks like one brewing. Look at the OBV volume is moving up with price. I think that looks fantastic. And you have obviously a scooter relative strength here, guys. Among its peers, it is got a 95.4. So it has been holding up very strongly since February. So I think that one looks pretty interesting, TPX. All right, that's all the chart breakouts I have. I know we need to go ahead and look at that poll. And I know, Julius, you're still here. So maybe we can talk about those results. There are the chart breakouts that I went through. I added a few extra bonuses in there. I will have that scan ready, and in the MarketWatchers live recap, I put a scan in the last one that people were asking for. So, and there we are.
Nice poll.
Mm-hmm. Price relative and Scooter's mine. That's my favorite. And RRG, hey, it's in there.
Yeah, well, I already said in the chat room that if you like price relative, like ratios, then you love RRG, but you're just not aware of it yet. Because RRG is totally based off of price relatives, price ratios. The only thing that's different is that the price ratio, like XLK SPY, you have to look at one-on-one charts for every sector or every stock that you're looking at. And if you take the 11 sectors against SPY, you have to look at 11 charts. But not only that, when you want to discern whether you like XLK better than XLV or XLY or whatever, you have to make that comparison. And RRG does all that for you. So RRG puts all those price relatives in one picture. So for those of you who don't use RRG yet but love the price relative, take a look because it's going to help you.
Well, I think too, if you look at the way the question was worded, it's the favorite way of analyzing. It doesn't say that they don't use the RRG. It could be that a lot of
You're right.
Because I use RRG, but I'm still probably more swayed toward those price relatives as well. And I actually use Scooter quite a bit, especially when I run scans. That's probably my favorite relative strength tool as far as scans go.
Okay, so well, and on that note, I might have to be honest and say that price relative is my favorite because if you look at my charts and my chart layout, there's always a price relative under every bar chart.
Yep.
Exactly.
Well, I got to tell you, it was a great show, really fun. Julius, Arthur had to go, but both of you did great on the show. I thought it was a really interesting conversation. I gave everyone a lot of different perspective in terms of relative strength. Erin, great moderation.
Thank you.
Also want to thank everybody for joining us today. We do have one more relative strength show coming up. That will be with Dave Keller tomorrow, so make sure you're here with us. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Thursday afternoon, everybody, and we'll see you back here tomorrow. Happy trading.